Hi, everyone. Thanks so much for joining us for another edition of Royal LePage Binder Live. My name is Arms Bumanlag, and we take a look at the market that is our Windsor Essex real estate market and the month previous as we dive into April stats and get our heads wrapped around what's happening in the real estate market. Joining us, as always, is a friend of mine, Mr. Frank Binder. Frank, always good to see you, sir, and lots to unpack for April. And I guess the big term we're going to be talking about is sort of the winds of change here and what's been happening with some of the numbers that have continued to come across. Month over month, things are quickly moving.
Things are moving, yeah, and it's what happens in our business from time to time. I liken to certain corrections that have to be that it has to go through, and they're quite natural. We're living in a world of inflation. It's not unusual that some of these things will take effect, and some of it is taking effect. Particularly, and we'll get into that in a moment. But if we start looking at the units sold, basically you see 225 sales under 200 under the 550 mark, 392 up, and that's more of a balance. Before it was really weighted to the over the 550 mark. There are some reasons for those changes. Part of it having to do with interest rates. We think that the interest rate increase is going to have some kind of drag on our business. We're already starting to see it. The reason why we see it so quickly is because people pull back and they reanalyze just what they can afford, what they can't afford. They've got to contact their bank and do those types of things too to make sure that they're approved at new rates and so on and so forth. So that's something we'll talk about that a little later in our segment here. But because it does have some effect on our price. Certainly, if we're faced with another interest rate, it'll be even higher. The highest price category there was 800 to 899. I've never seen that in that category ever before, but they had 64 houses that sold in that. What's really remarkable is to understand that the demand in the 1 million category has really dropped down. We had 95 of those last month. We only had 68 of those this particular month. And so what we're finding is that there is a slowing down in the high end of the categories that in the sales categories that we've had. So this is basically the situation that we're involved with right now. All right, maybe we can move on to the interest rates to talk about that a little bit, give you a sense of why this is happening. I mean, if you look at the cash flow, I mean, there's a lot of information here, but our fixed rates have moved, and they moved up, the half a point that the Bank of Canada implemented a while back. This is the effect of it. So what I wanted to show for our consumers particularly, and for our agents as well, is to show the difference between a $400,000 mortgage, a $600,000 mortgage, and an $800,000 mortgage. And what we're trying to show, if you look at where the difference is there in these categories, you can see what the cost is per month as to what those differences would be what's the effect of those differences based on those mortgage amounts. So, you can see why people will step back a bit and take a look at, what can I afford it? Can I afford what I'm doing? What I was contemplating doing last month at a much lower rate, and those things would have been much more affordable to me. Will the $461 or the $454 affect me greatly or not? And so on and so forth, all the way up to the 800 mark, where you're talking about $900. And that's going to affect the general consumer, right? So we have to be aware of those things that are happening to people, and why we're getting a bit of a pause now. We're getting people having to step back and just not jumping forward with their purchase so quickly. They're taking a look at their financials. They have to look at the whole picture. They've got to go back to banks, talk to them about whether or not they're qualified, and so on and so forth. So all those types of things are happening. Some of our obviously some of our buyers have a rate guarantee. They can certainly do that, and they'll be rushing to get used, because that's usually about a 90-day period. So they may rush the market to try to get that accomplished because of the rate guarantees. And most rate guarantees will be held. Some mortgage companies will not have a rate guarantee, and they'll call it back. So this is the kind of thing that we have to look at. We talked about that with our sales group, just to get a sense of what it is. Because when we just talk about a half a point, what's a half point mean? Well, if you're looking at a $400,000 sale, $400,000 mortgage, that's about a regular sale. You're talking about $500,000. That's the average market. So everybody who's buying it, the average is going to be faced with anywhere from $300 to $500 a month difference in their budget. So it's relatively good size, right? And so that's why we're having a bit of a pause in terms of the buyer's market. If we go to the next graph with the just the listings, I want to show you what's happened there, and that's kind of interesting. Is that in April we had 1,074 listings taken compared to last year, and that's another increase. So we continue to get month after month an increase in our listings, and Arms, if you'll remember, we've been talking about that. We were also talking about the inventory, but we have 1,074. It's a 12% increase, a 12.5% increase over the month before, or probably over last year. And we continue to see that. That's been pretty much regularly happening, where there's been more and more listings being put on the market. And because of that, we can also also indicate to you that when we started the month of April, we already had an inventory base of 726 listings. That's residential homes, right, that were available for sale already. And we added to that 1,074 in the month. Well, now what we're right now sitting with 1,376 houses available for sale right now, as of today. And basically what happens is, as the listings increase, the supply increases, it just takes more time to sell houses. So, can we expect the houses to sell in 5 days, 10 days? Not likely. Buyers will take time and look at what's available. And so we're seeing that in the business, that they're taking their time to look at houses. There's a lot more for them to select from. And so sellers need to get used to the fact that my house isn't going to sell in a week necessarily. And by the way, you might not get cash offers. You might get conditional offers, right? Because I need to make sure that I can get my mortgage together. I need to make sure that will you get a multitude of offers? Well, I'm signing an awful lot of cancellations and rejigging right now, because we're not getting all kinds of multiple offers on every property. Not to say that doesn't happen. It's going to happen in certain areas. You may get multiple offers, but for the most part, I would tell you by the end of May, that it's not going to be a thing of the past, because it still can happen, but it won't be as frequent. So you're going to look at more of what we will get into this a little later, about more of a balanced market. And so that's one of the things we need to really pay attention to, because we are into a bit of a change. And if the listings continue at the streak that they're in, that we're getting a lot of them on the market, a lot of selection there. Now the supply is becoming much higher than the demand, and it's meeting demand and surpassing demand. So that's going to change our market somewhat going forward.
The average sale price too, that's something that you wanted to talk about for last month too, to take a look at the comparison from year over year, right?
Yeah. And there's not a whole lot of change there. The monthly average, this is showing what the average was for the year. That's the annualized rate, 698, 582. And it's, compared to 700 the month before, 750, 453 the month before. You look at that and go, well, that's, $1,700. What's the big thing there? But what I'm trying to also, what you don't see in the graph here, is that the monthly annualized rate was 692. So your monthly rate is starting to drag that annualized rate down. And so it'll be interesting to see where we end up for the month of May, because as you get greater supply, your average price will start dropping. Average prices will drop a little bit at a time. You go to big markets like, for example, Toronto right now, where they had a 41% drop in sales. The effect was immediate. You had an average sale price that just dropped in Toronto. And so when you have that, even those folks who would come to Windsor and they can't get what they thought they could get for their home, they pause as well. They don't come down here and give you an unconditional offer or cash offers on your property, because they're not sure what they're going to get for theirs. And so this is the kind of stuff where you have some uncertainty on both sides of the spectrum, both on the buyer's side and on the seller's side. What you do see is a bit of a slowdown in the market, so people can get kind of acquainted with what's going on and how am I going to live in this new environment that is coming up. And that's part of the story here. So your average sale price, look for it to drop, especially if the inventories that we're carrying right now continue. You have to realize that when we started with 726 listings in April, and we add another 1,200 to it, now you have 1,900 listings that will be there available. So how much will we end that month at? Will we end that month at 800, 900 homes? So those are the things, as it starts to increase, will affect our market. It will have an effect over the months, and I don't like to say it's a trend, because I never use a trend word unless it's 3 months, right? Mm-hmm. I always do trends on the basis of 3 months, but we're already seeing the makings of a trend going forward. All right.
And something else we wanted to show the audience as well, in terms of sale listing here, and sort of the comparison between 3 specific sectors, right?
Yeah. And basically, what am I doing here? This is basically an education piece. We always use the thing. We're always talking about a seller's market. We're talking about a balanced market, and a buyer's market, and what we have to. And we also talk about percentages. So, in last month, for the very first time that I've seen, the annualized rate of the sales to list ratios in the last month was about 70%. But one little factor that's not on the graph was the fact that 55% was our monthly rate. So the 55% moved it into the balanced market, which is between 40 and 60%. And what we're talking about here, when we talk about a sales to listing ratio, how many properties are listed or available, how many properties sold? It's as simple as that. And you just divide the two into each other. So when if you're in a 60 or more, and we've been at 70 and 80% actually, it's obviously been a seller's market. Well, we've just moved to a balanced market, and the buyer's market is at 40% or less. So that's what happens to our market. You've really got to understand the market and understand that you are in it, whether you like it or not. I've had this discussion with a number of my people, and have we hit the apex, and are we on the other side of the apex? We could be. And you've got to understand that that's just where you're at. And that's just part of selling houses in our current marketplace. So, this is where we're moving to a balanced market, probably between 40 to 60% over the long term. Should we really be concerned about the future? I think we have a great future. Real estate will have a good future. Where this will end up exactly, I'm not sure, but we are certainly going to be going through a correction. And the bottom line is that the Bank of Canada, it's a question in June whether they set the new rate higher or not. That could affect us more. But you got to remember, this is even the interest rates that we showed you. These are roughly the interest rates pre-pandemic. We were already at those rates before the pandemic came, and of course, the Bank of Canada dropped the rates down during that period of time, and we're now going up. The only other thing that wasn't there at the pre-pandemic is the inflation that we're currently going. Every house is going through the things. This is costing us. Gas is costing us more. Groceries are costing us more. Everything's costing us more, and that's the mortal enemy of the Bank of Canada. They don't want to have to deal with inflation. They're inflation fighters, and so if they concentrate on that and they up the rate yet again another half a point, those will have some consequences for our industry. There's no question about it, and we have to realize that. Will that happen? Well, the home industry is a stimulant, if you want, of our economy. They want to be very careful not to put the fire out, so to speak, of the stimulant. Sure. They want to make sure that it continues. So they're going to be cautious about raising it. My take would be that maybe it won't be a half a point, might be a little bit lower. Will it go up? More than likely, because they still have to fight inflation, and no question about that. So they may take a more cautious approach. We'll have to wait and see on that one. But that's the way we're looking at it. But we are looking at changes now for the first time in probably about the last 2-3 years of having the market the way it was. So expect to have offers that are conditional on mortgages, inspections, so on and so forth, much like it was pre-pandemic. It's not. It's likely going to be that way again. But these are the changes, and we have to let our people know. I'm trying to get the word out to all of my salespeople to get it out to their clients out there to understand what's going on. And just simply call us, ask us. We should be able to give you a good, clear picture of what it is. And we're noticing, like for example, days on the market That's one of the criteria we look at. How long is the houses staying on the market? They're clearly higher. The averages are well into 2 weeks to 3 weeks now. So, I mean, we have to pay attention to that. And, one more thing about this is we've been underpricing. Whether that is a better thing for you to do at this point in time is questionable. The difficulty is that we have people guessing at what the seller wants right now. So I've been telling my people, list it at the market price. Put it at, like we used to do it. Put it at a price that the seller wants, and you take the mystery out of it, right? Because right now we've been pricing at a lower value, under market, and getting multiples. So that was the idea of it. Well, if you're not going to get the multiples, then that strategy isn't really the best strategy to be used in selling your home, as far as I'm concerned.
It's some great insight, and it'd be interesting to see where this all goes too. Frank, thank you so much for spending some time with me yet again, my friend.
Thank you. Appreciate it. Thanks, Arms.
Thank you, now. Mr. Frank Binder, who is our broker of record, and from Roy LePage Binder Real Estate. Great guy, some great advice. It'll be interesting to see where this all goes over the next little bit as well. So if you'd like more information, you can contact the agents of Roy LePage Binder at roylepagebinder.com. They can walk you through the process and talk to you a little bit about whether or not it's a good time to make a move for you and your family. So thank you so much for joining us on this edition of Roy LePage Binder Live. Again, check them out on social media and follow along on Facebook, Twitter, Instagram, and on LinkedIn as well. Have a good day.